Welcome back to Investing Talk Podcast.
Today we're looking at RCAT holdings.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. What we're seeing here is a company that's in the middle of just a massive transformation.
It really is.
They're shifting from being this, niche drone software provider to something much, much bigger.
A scaled, all-domain autonomous systems platform. And it seems like the focus is almost entirely on defense now.
Overwhelmingly. It's a fundamental change in who they are.
And the numbers really back that up. They're striking. For Q3 2025, they delivered, what, $9.65 million in revenue?
Right. And on its own, that number might not sound huge, but the key is the context.
Year-over-year growth.
Exactly. It's a 646% increase. That's not just growth. That's an explosion. It shows demand is accelerating like a freight train.
And it seems like it's just getting started. The guidance for Q4 is even more aggressive.
That's what really caught my eye. Management is guiding for $20 to $22 million.
In one quarter.
In a single quarter. If they hit that, it's a 1,455% annual growth rate for Q4.
That's what an inflection point looks like on a chart.
It absolutely is.
But to fuel that kind of growth, you need cash, a lot of it. And they secured it.
They did. That $172.5 million public offering was completely transformative for them.
So you add that to what they already had.
And they're sitting on a war chest of about $212.5 million in cash and receivables.
So all those liquidity concerns that analysts had before, they're just gone.
Wiped out. This gives them a multi-year runway. It lets them make these huge capital expenditures without, worried about keeping the lights on.
Okay, let's unpack this then. What makes raising all that money worthwhile? It seems to be all about building a real competitive moat in the defense sector.
That's the perfect way to put it. The moat has two main parts. First, they're a validated U.S.-based NDAA-compliant manufacturer.
Let's break that down for our listener. Why is being U.S.-based and NDAA-compliant such a big deal right now?
It's a massive strategic asset.
Sure.
The Department of Defense is actively moving away from foreign supply chains, especially from China. Being able to build these systems here in America means you're a trusted partner. It's a barrier that foreign competitors they can't cross.
And the biggest validation of that trust has to be the Army contract, right? The SRR program.
Absolutely. Securing the short-range reconnaissance contract for their Black Widow drone. That was huge.
They didn't just win it, though. They actually unseated the previous company.
They did. For the expanded $35.1 million program, that tells you their technology is superior.
In what way? Is it just a better camera or something?
It's much deeper than that. It validates their edge in things like electronic warfare capabilities.
So the drone can operate when it's being jammed.
Precisely. And its modularity. The Army loves that. You can swap out parts and upgrade it without buying a whole new drone. Winning this really establishes them as a credible prime contractor.
Okay, this is where it gets really interesting for me. They're not just sticking to the air. They're expanding into a brand new market, unmanned surface vessels, USVs, with their Blue Ops division. That is a massive diversification move.
It's a huge pivot. And that's where a big chunk of that $172 million is going.
Right into that new Georgia facility.
Exactly. They're putting $25 million into a 155,000 square foot factory.
And the capacity there is, what do they say?
They're talking about being able to produce 500 to 1,000 vessels per year.
1,000 boats a year.
That capacity, which they're building before the big contracts are even announced, that's what management calls the moat.
So turning to the market, the technical signals, the way they raise that money seems to be a huge vote of confidence from institutional investors.
Oh, it's a textbook bullish indicator.
Yeah. I love tracking institutional demand. The fact that the underwriters exercise their full over-allotment option.
The full 23.4 million in additional shares.
For our listener, why is that so significant?
It's simple, really. It means institutional demand was way higher than the initial offering size. The banks only do that if they have buyers lined up and ready to go.
So the smart money was hungry for more shares.
They were. It shows they see this dilution as a good thing, as fuel for future growth.
And there was another signal too, right? Something about a key investor waiving some rights.
Yes, and this is a bit more nuanced, but it's a very strong signal of insider confidence. A key convertible debt investor voluntarily waived their anti-dilution rights.
Okay, so they basically said, go ahead and issue new stock. We're okay with our slice of the pie getting smaller. Why would they do that?
They would only do that if they believed the value created by the cash injection would far outweigh the dilution. They think the stock is going much, much higher from here.
That's a huge vote of confidence.
It really is.
But, despite all this, we've seen volatility. There was a sharp sell-off after the Q3 results missed on the EPS line. So what does that mean for the price right now?
Well, that post-earnings weakness. Some analysts have called it a reset entry point, or even a sell-off gift.
A gift.
The idea is that the market overreacted to the short-term loss, which is expected when you're spending heavily to scale up. But the core growth story, that 636% revenue jump and the massive Q4 guidance, that didn't change at all.
So the smart money is using the dip to accumulate?
It seems that way. Institutional ownership is still high, almost 38%. They're betting the stock will re-rate higher as the company starts to deliver on these new promises.
Okay, so for the listener prepping for a meeting, let's balance this out. We need to talk about the risks. What are the key hurdles they have to clear?
The biggest risk by far is scaling. It's pure execution risk.
Going from a startup to a mass producer.
Exactly. They have to deliver thousands of these Black Widow systems for the Army and at the same time get a brand new boat factory up and running.
And if the USV division doesn't get traction?
Then that massive capital raise starts to look like very expensive, value-destroying dilution. It's a huge bet.
And what about the risk to investor confidence? They did cut their guidance pretty sharply earlier this year.
That's the forecasting credibility risk. It's a big one. They blamed government budget delays, and they insist the demand is just deferred, not destroyed.
But investors have long memories.
They do. Any future misses would really strain that trust. They have to hit their numbers now.
So let's lay out the catalyst calendar. What are the near-term events we should all be watching?
The next 3 months are absolutely critical. First, the Q4 2025 earnings report. That's probably coming around January 2026.
That's the big one. Do they hit that $20 to $22 million revenue target?
That is the #1 question. It's the ultimate test of their credibility right now.
What's next?
We should be watching for any news on the multi-year SRR Tranche 2 contract. That award is expected in the first quarter of 2026.
And if they get that, it cements their position.
It does. And finally, we need to see something from the Blue Ops USV division.
Some real news, a contract, a launch.
An announcement? Anything that shows their big bet on maritime is starting to pay off. In summary, RCAT Holdings has completely changed its risk profile.
It has.
The investment here is clearly a multi-year growth play. It's a bet that this massive factory expansion and their government contracts will justify the heavy investment they just made.
The takeaway for you is that this is a classic growth story at a huge inflection point. It's going to be volatile, but the signals from institutions suggest they believe this company can turn that war chest into a real scaled defense technology powerhouse over the next 1 to 2 years. And don't forget to subscribe, like, and comment to support the show.